With Major League Sports shut down worldwide due to the pandemic, many sports bettors are believed to be investing their money elsewhere. A report in Axios takes a look at whether these gamblers could be a driving force behind the stock market's recent surge. Online brokerages have seen a record number of new accounts opened this year. While it's not clear how many are linked to sports bettors, it appears day trading may be replacing gambling for some. Dion Rabouin co-authored that piece and joins me now. He's a markets editor at Axios and author of the Axios Markets newsletter. Hi there, Dion. Thanks so much for being with us. This is so interesting. Well, first of all, what are some of the similarities between day trading and sports betting? Because it would seem that both activities involve, of course, a level of risk.
Certainly, and that's what's got, I think, a lot of folks who were doing sports betting moving over to day trading really excited, saying, oh, this is basically the same thing. A lot of them are making bets that aren't based on a lot of research, that aren't based on a lot of really fundamental analysis. It's just kind of, this is where the market's going, I'm going to follow that. Sports betting and the stock market have gone through a number of different changes to make it easier for everyday folks to get involved. So the same way you've got sports betting being legalized, you've got your kind of sports books that you have online, and a lot of these are designed, the apps and DraftKings and things like that are designed by brokerages or stock markets like NASDAQ to actually make it easy for sports bettors to use and lay down bets, where they want to do parlays, individual bets, whatever. And those same systems are being created for these programs like Robinhood and TD Ameritrade and some of the other brokerages. So sports bettors are finding it very easy to go from something like a FanDuel, over to a TD Ameritrade, a Fidelity, something like that. And through just a little bit of research, all of which is available within the app, they can watch videos, they can do research, they can check charts and really do the technical analysis and kind of make themselves feel like experts. And switching over to the stock market and making calls there. And a lot of these brokerages are allowing them to do option calls or trade margin, things like that. Some of these things that can be very, very risky and are really more directed towards sophisticated investors with years of experience.
Well, millions of small-time investors have opened trading accounts in recent months. What kinds of investments are experts noticing from these traders?
Yeah, it's a lot more betting on some of the big names like your Amazons, Apples, these trendy companies that, really are purchased by a lot of stock market professional investors. But in this case, you're seeing a gravitation that retail really always had, and it's a lot more of picking by popularity. We're also seeing a phenomenon that really kind of goes without explanation or without the traditional explanation of why people would invest in bankrupt companies. So a company like Hertz Rent-A-Car that announced it was going bankrupt a few weeks ago has seen a ton of activity. It was actually one of the most traded stocks on Robinhood after it had gone bankrupt. They actually even produced a new pool of stock for $500 million, basically saying within the prospectus of that stock that, hey guys, this stock might not be worth anything within a month. It's very likely that this stock will be worthless and that we won't pay you back once our bankruptcy filing is complete. And folks are buying it anyway, largely doing what folks in the investment community call the greater fool investment argument, which is basically it doesn't matter what a stock is actually worth. If you buy it and you can sell it for more than you bought it for to a greater fool than you, then you can make money. And that's a lot of what's going on right now is this speculative buying, not based on any of the value or market analysis or really analysis of the economic environment or the expected growth of a company that you're buying the stock in, but just on expectations that this stock will rise because it's popular.
That's pretty remarkable. So, Dion, what happens when sporting events start to return? I mean, could we see some of these new investments disappear?
Yeah, we certainly could. I mean, the big question, I think, is going to be how much sticking power do these things have once people have other options? Now that people are going back to work, people are starting to talk about some of the changes we're seeing in the market. When the stock market sold off earlier or on Friday last week, people started saying, hey, maybe it's because people are going back to work. They're not on their Robinhood trading account moving stocks around. We don't really know if that's true because you really can't dig in and find the exact fundamental numbers of the market, who's trading where and what they're doing right away. But what we do know is as sports come back, as people start to go back to work, as they have more of these casinos opening up as well, where they can just go in and start playing blackjack and roulette and things like that, there could be a shift of some of these guys away from the stock market. And what you could also see is maybe them taking folks who they know who are in these casinos, maybe meeting people and saying, hey, I'm on Robinhood. Why don't you come on Robinhood? And in addition to, the sports betting we're doing over here at the sports book, and in addition to some of the bets we're laying down at the casino, we'll also buy some stock. And that could actually pump up the investment from retail traders in the stock market. I think a lot depends on how long this ride can go. Folks have been saying, myself included in the Axios Markets newsletter, that really this stock market rise over the past 2 months is not driven by fundamentals of the economy or of the underlying companies in a lot of the cases where you're seeing that rise. It really does just seem like a bit of a melt up in the market where folks are just kind of buying whatever they want, and all the sellers, people who would normally be potentially pushing the stock down, working against that momentum, are just out of the market with their hands out. We've seen over the past couple months, professional institutional investors are putting basically zero into stocks. They're still selling a little bit, but mostly they're moving to cash. We're seeing the highest levels of cash and people moving out of the market that we've ever seen. And really, retail traders could, if this run continues in the market, control the market potentially for a long time.
Wow, it is such a fascinating concept and fascinating data to hear about. Dion Rabouin, I'm afraid we're out of time, but thank you so much for joining us. Really appreciate it.
Yeah, thanks for having me.